Hey there, it's Shane Brosnan with BML Wealth Management. Welcome to this brief video breakdown of a topic that many of our clients have had on their mind right now since tax season is right around the corner, and that is obviously taxes, specifically taxes in retirement. A lot of times people think, what their biggest expense in life is going to be. Is it going to be healthcare? Is it going to be their house? For most, it's actually going to be taxes. So we really want to make sure that we talk about that with our clients, and it's generally not going to change as you get into retirement. So what are some of the investments that we need to be aware of, or some of the different types of income that we need to be aware of that are taxable in retirement? First and foremost, it's one of your biggest assets out there, and that's your 401ks and your IRAs. Most people don't realize when they come into our office that that is going to be a taxable event. When you take money out of your IRA or your 401k, it's completely taxable as ordinary income. It's not all yours. Part of it is going to be Uncle Sam's as well. So we want to make sure we plan for that and take account of how much of that taxable income do you want to take in the beginning of retirement, middle of retirement, end of retirement, and if there's a coordinated effort to see if you can take advantage of that tax situation as best you can. The other thing that people are sometimes unaware of is that Social Security is also a taxable source of income for most of you out there. So you can either have 0% of your Social Security taxed, or you could have up to 85% of it be taxable, and that really depends on your provisional income. The provisional income limits that kind of determine whether or not you have zero taxed or up to 85% of it taxed is not that high. It's $44,000 a year as a married couple. So if you're making over $44,000 a year as a married couple provisional income, 85% of your Social Security is going to be taxed. Now, does that mean all 85% of it is gone? No, it just means it's subject to taxation, and 15% of it is going to be tax-free. And finally, the last thing I wanted to touch on is Roth IRAs. I've talked about how things are taxable. Let's talk about how you can avoid some taxes. Roth IRAs are tax-free income or tax-free money that's growing for you. And when you take a distribution, it's going to be tax-free as well. So a lot of my clients and a lot of the people watching this may have been in a situation where they weren't able to contribute to a Roth IRA because their income may have been too much or just didn't exist when they started working. As you get into retirement and possibly your income goes down lower than when you were working, we always want to make sure we examine, does it make sense at this point now where you've got this window to possibly do some Roth IRA conversions? And we can work with our accountant, with your accountant, and with our team here doing some planning to see if it makes sense. But we want to see if we can create some tax-free income down the road in retirement to go along with all this other taxable income that I just talked about. So planning, having a plan, talking to an advisor and making sure that you are aware of all the different options out there is the most important thing that you can do. So if you haven't already, reach out to somebody in our office here at BML Wealth Management. If you have any questions or you want to talk about any of this in more detail, we're here for you.